Start with a karakia. Whakataka te ho ki te uru, whakataka te ho ki te tonga, kia mā kena, ki uta, kia mā taratara, kia tai, e ha ake ane te atakora, he te, he huke, he hohu, te he Māori ora. Welcome. Let's begin with any apologies. I don't believe there are any apologies. No. Or any extraordinary business. And are there any conflicts of interest that are not in the register that need to be declared? No? Great. We can then move on to our actions, which is page 5 of Diligent. We have 5 actions there. I don't think there's any update on that. First one is marked as completed. I think the second one was completed in the last hui. The amendment to the terms of reference we made at the next meeting. I did notice on that does need a further obvious update on the terms of reference to note the new members. And then we have 2 open items of the Treasury policy around the credit facility. We have a mover and a seconder of the actions. Thank you, Bruce. Seconder. Thank you, Sophie. All those in favour? The terms of reference is there for information. My quick read of it was that it just needs an update to include the new members, and then when it's cyclical to have its refresh, which I think on the plan is next year. We'll relook at it then. Right, Chairperson's report. So welcome to the first Audit and Risk Committee of the new triennium. Exciting time to be here, and I have met my fellow colleagues about an hour and a half ago, I think it was. So yeah, we had a good hui and kind of some explanations on how this committee works. We've got, you just see from the last agenda item, we've got a terms of reference, which I think I discussed in our meeting, that drives pretty much our swim lane and our scope of this committee, because there are obviously other committees that sit beneath council. Yeah, within that terms of reference, we also have an annual plan, which I think we developed a few years ago now, but that's the request to management for that was to allow us as governors to make sure that we meet the obligations under our terms of reference. So as long as we know we're discussing and we're getting reports that are in line with that annual report, then we know we're meeting our obligations under the terms of reference. So you'll hear me constantly coming back to that terms of reference, because it's very easy, as you can imagine, as I said in our previous hui, when you have risk in your title as a committee, it's very easy for everything to come into this committee. So whenever in doubt, then just keep coming back to this terms of reference to see whether it's in scope. For this paper, Chair's report as a verbal update, I normally there are 4 meetings a year, or 4+1 I call it, 4 meetings and then +1 for an annual report. This hui, we've managed to combine it into a very concise hui to finish at 5 o'clock, so we'll see how we go. But I also do, obviously as chair, there's a lot of things that happen in between my quarterly meetings. So what I've been doing in the last quarter, I was involved with the Selwyn Water Board appointments. I have a bi-monthly call with OAG for all Audit and Risk Committee chairs around the country, and that is referencing topical risks and challenges. And as you're aware, OAG perform their own audits. Now Audit New Zealand friends can tell us this, as OAG can turn up any time and audit us on anything that they like, and they just pick which councils they want to work with, and they pick which audits they want to do with. And so the findings that come out of those reports are shared with all councils across New Zealand. So I attend that call on on a bi-monthly update, which is well. And then this morning we also had our board-to-board hui with CORD, so that is a bi-monthly call where it's a very structured and kind of formal meeting now, which is great. We have a kind of terms of reference and agenda where we go through pretty much working from their, from their statement of intent. So we look at their financial performance, we look at their strategic risks, we look at their health and safety and opportunities and everything that's within their strategy. And I believe they're coming to full council hui next week, I think it is. So that was a good meeting this morning. So there's probably nothing further from me as a verbal update. Again, we had a good meeting this morning. My fellow colleagues just kind of setting the tone. It's exciting to have some fresh and new kind of thought, diversity of thought around the table. So yeah, very much looking forward to working with you and delivering best outcomes for Selwyn and all things audit and risk. So no further comments from me. If I could someone move my verbal update, please. Thank you. And a seconder. Oh, thank you, Lydia. All those in favour? Alrighty, our chunkiest and most important agenda item of the day, annual report.
Thank you, Madam Chair, and welcome to the new members of the Audit and Risk Committee. This is probably the biggest meeting of the year of this committee, so you've come in at the right time. I'm going to introduce the paper and give a quick overview of the context, and then I'm going to pass to Rob and Neil, who will talk a little bit about the process, and then we'll welcome our Audit Director, Derek, to say a few words as well. So the purpose of this report is for the Audit and Risk Committee both to receive the information that's been provided to you in this report, to note the draft letter of representation, and to also note the draft independent auditor's report. And then to undertake a number of recommendations that the Council will receive at their meeting next week. And these are all laid out in the recommendations section. I think it'd be important to note too, as noted in the purpose, that this is still an ongoing audit, and there may be some changes that have occurred since the production of this paper, and the team can touch on what some of those issues or changes might be and whether or not they're material or significant to influence the outcomes of this audit. From a legislative point of view, a local authority must adopt their annual report annually by no later than the 31st of October. However, you'll note that we haven't hit that, and that is on the basis that the election results were only known a week or so before that, and a decision was taken to actually give the new council time to come to understand the role and to get an induction process in there, rather than actually taking on what is a significant decision well within the week that you were sworn in. So that is the reason, and we think that we're on track to hit the 26th of November as an adoption date for council. The annual report compares the planned activities from year one of our LTP versus the actual activities that we did in the previous financial year. It is interesting because with the new council, this is implementing the decisions of the previous council, and so we recognise that it is we're asking you to look back into something that some of you have not had input into. But we hope that the information we provided transparently and also with some degree of precision gives you confidence that what we aim to do we have delivered, and if we haven't, we've got an explanation for why. I'm going to pass over now to Rob, and because the audit process itself just doesn't start when we see the auditors turn up here to talk about it. So Rob's going to give a bit of an overview of the audit process that council and staff have been working on, and how audit and our council staff work together to make sure that what you see today you can have some confidence in. So over to you, Rob and Neil.
Kia ora koutou. So in terms of, as Steve said, as we prepared the annual report, we started sort of towards the end of June by creating some sort of templates to collect the information that would comply with the requirements. So there's quite a prescriptive approach taken to developing the annual report. As part of that process of collecting the information from different parts of council, which is a very collaborative approach, we also asked the heads of departments and the exec directors to sort of do a QA, be involved in the QA process, quality assurance, to ensure that the information being provided by their teams was accurate and a fair representation of the performance of their particular areas. We also had a project team that met twice weekly for stand-up meetings to address, give an update on where they were at, but also to raise any risks and issues to the project sponsors, because we wanted to ensure that issues as they arose were dealt with promptly and quickly and were escalated to the right part of council. We've also worked closely with Audit New Zealand prior to them having a draft copy of the annual report to clarify expectations and to ensure that we were as prepared as we possibly could be. And the exec leadership team received a fortnightly progress update on the preparation of the annual report. So on the 19th of September, the draft annual report, parts 1, the introduction, and part 2, the service performance, were provided to Audit New Zealand. And on the 23rd of September, Audit New Zealand received part 3, the financial part of the financial statements of the annual report. As I've said, we've worked closely with Audit New Zealand to respond promptly to queries. With Audit New Zealand use an Audit New Zealand dashboard where they raise issues, questions, clarification for information that we then respond to and upload documents, etc. And we've tried to do that as promptly as possible. As you see, the report you've got is still in progress, and as of today, we're not aware of any significant changes to the version you have. There will be some minor changes, but nothing significant. So I'll hand over now to Derek to talk a little bit more about the work that they've been doing and their findings today.
Thanks, Rob. Thank you, Chair, members of the committee. Always nice to be able to present to you as well. To have reached this point as well, we at the forefront of signing the audit opinion that gets included in your annual report for adoption at the next council meeting. Again, from my perspective, just would like to thank management and council for the good cooperation throughout the audit this year. I think a marked improvement from prior years, my own experience, but really want to thank you for that cooperation throughout the audit. As Rob mentioned, I think really to have taken a proactive approach in terms of providing information timely, and that put us in a good position to also then be able to audit the different sections of the annual report and the statement of service performance as well as the financial statements. We did provide a handout which is a report to council in terms of our findings from the audit. So I take that you wouldn't have had an opportunity to read through the report probably before the meeting. So at a high level, I'll go through it and just summarize what we've included in that report, but it gives you a sense and hopefully some comfort to be able to adopt or recommend that the annual report can be adopted at the next council meeting. Firstly, we intend to issue an unmodified opinion without an emphasis of matter. As the chair mentioned in our in-committee meeting prior to this meeting, probably the first time in a number of years that council has been able to receive an unmodified opinion without an emphasis of matter as well. So that's really something to celebrate. And we come to that conclusion based on the fact that there aren't any material misstatements included in the financial statements. So any misstatements that was identified throughout the audit process, those have been corrected, and any uncorrected misstatements in isolation or in aggregate is not material to the fair presentation of the financial statements. Then we had some focus areas, and these were contained in our audit plan prior to the audit. So we had good engagement with management prior to the audit starting, discussing issues and risks that would impact our audit approach, and we then also comment on those focus areas as part of this report to governors. The key ones probably being, and our big focus was around the valuations, valuation of your 5 waters infrastructure, valuation of your roading infrastructure, valuation of your investment properties. Those are always, if you look at your financial statements, your property, plant and equipment is probably the biggest amount in your financial statements. So a lot of work does go into that area of the audit. Again, can say that we were comfortable with all the evaluations that were performed. We did identify some misstatements within the 5 waters valuation, as well as within the investment property valuation, but those were corrected throughout through the audit process. So there are no uncorrected misstatements as a result of that. Also for instances where council are not required to perform an annual valuation because the carrying value is determined not to be materially different to the fair value, council can perform an in-house fair value assessment. Those were performed, and it was concluded that there weren't any material movements within those areas of the financial statements. Also, your share investment in Cord, that is accounted for at fair value. Again, an external valued performed evaluation, and we were also comfortable with that valuation, with the assumptions and judgments being made and applied. So we, again, were comfortable with that figure in the financial statements. Also, local water done well. You've established a separate CCO, a separate entity to perform your water services, and that will be consolidated into council's accounts, but we determined that it is not a significant component as of yet, because there's only limited transactions going through before year end. We also looked at those transactions and were comfortable with how they were treated within council's group and consolidated accounts. We just then also, in terms of the report, we just highlight some of the judgments that are made by management in preparing these financial statements. And in some areas, as I've mentioned, there were misstatements, but those were corrected. But overall, we are quite comfortable with that management do take a balanced approach when one looks at the judgments and assumptions being applied to valuations, because if you prepare a fair value set of financial statements, you know that figures can move quite materially based on the different assumptions or estimates or judgments that are applied. But I think we are quite comfortable that management do take a fairly balanced approach when making these estimates and judgments and assumptions within their financial statements. So at a high level, that's probably a reflection on this year's audit. Thank you.
So in terms of, I guess we come to the options and how you wish to approach the paper, Madam Chair, but in terms of, we've got 2 options that we've written into our report. The first and our recommendation is that this, based on that feedback, that the annual report is accepted and recommended to Council for adoption. That's contained in the recommendations on the front page. We'll touch on the deferral option, because that is a legitimate option if you wish. But just to note that whilst you could defer this decision for a later date to get more time, there'll be quite a significant consequence on both cost and the organisation's resourcing, especially as we move quite rapidly into annual planning and we're starting to pull together the annual plan process. It is the same team doing both pieces of work. But that is the option in front of you as the second option. Again, it's not the recommended option. But Madam Chair, I'm happy to pass over to you now and we can work through the document.
So based on previous years, I think Alison, Neil, I'm used to kind of as chair just doing a page turn exercise of the annual report. That's an exaggeration when it's 300, 400 pages. But maybe for the purposes of my fellow committee members, Neil, I might get you to just give us a high level, maybe through the 3 sections of the report. But I might start that by saying today, it's actually a very exciting day for me because after 5 years, as Derek said, this is the first time that we have adopted on time, and I said adopted on time 31 October. I know we're a few weeks out, but we could have adopted by 31 October. And we also have a clean bill of health, if you like. We have no emphasis of matter, which is the first time in my experience as chair of this committee that has happened for Selwyn. So I actually want to start by congratulating Alison and Neil and the finance team, because it may, I think Derek or Rob, you might have said that, you think the audit starts when we hand you an annual report. It's like 3-4 months of a process of a lot of work at the same time of obviously going through elections and trying to set up a water entity, a huge amount of pressure on our finance team. So quite remarkable, Alison and Neil, that you have managed to get to this stage. So I wanted to start with my thanks on behalf of this committee of the work that you have done. Rob and Derek, I think a good outline of the purpose of this hui and what we're here to do is to adopt this annual plan. It is a backwards-looking view of our position. It is not an opportunity to go through and analyse where spend has been made or where we spent too much money. I mean, as a former auditor from 20-odd years ago, does this reflect a true and accurate position of our financial position for the last 12 months? And we go through an audit process that gives us an opinion on whether that is a true and fair reflection. So with no emphasis of matter, then we've almost ticked that box from Audit New Zealand. I think where we can contribute is we can definitely ask questions around the clarity, I think, and especially in year one, when you're trying to understand the annual report and where spend is. And also I think, this is a story. This is a story to our ratepayers on the work that we have done to deliver on our long-term plan and annual plan. So do we think the annual report, when you read it, does it tell that story well? Have we kind of articulated what we've achieved against the outcomes that we set? So that, for my view, is a humble view of one. That is my view of the purpose of an annual report. It's not a kind of opportunity to go through and start analysing why we spent money here or there, because it's too late. The money's left the organisation, and that's your finance and performance kind of committee as you work through the year and as you kind of measure against budget. So, Neil, I might hand you over to you to kind of do that, not page turn, but maybe if you can just talk us through at a higher level of the 3 sections of the annual report, and then maybe we can come to questions from other committee members.
Firstly, I would just like to thank you for the acknowledgement, and on behalf of staff, it was a big effort of all of council. It is a day-to-day process, and it's not just finance. I'll hand over to Rob soon. Rob and the comms team, they were very involved in sections 1 and 2, which is the front section, and then also the statement of service performance, and then finance rounded off with the financial statements. So the annual report has truly changed a lot over the years, going from just financial statements to the bigger picture. So I'll hand over to Rob to cover off the first 2 sections, and then I'll get into the finances.
Thank you. The first part of the annual report is the introduction. If it gives an idea, it really gives you an overview of the annual report in terms of our performance, There was a foreword written by the previous mayor. Just to sort of give an overview of some of the key things that have been achieved, and it's very much a reflection on sort of how we're performing against the long-term plan 2024 to 34, but the first year of that long-term plan. It gives a very succinct sort of overview of our performance, both financially and in terms of some of the levels of service and some of the things we've achieved. And then I'll just talk about part 2, and then we can look at a bit more detail if you wish. Part 2 is very much around the a deeper dive into the performance within the 7 core activities of council. And it looks into those in a bit more detail around their performance against the levels of service, the statement of service performance, and also the funding, the financial impact statement, which really gives an overview of the finances, the cost of actually delivering on those services. So I think that sort of speaks to itself, but there are some key highlights, both financially, the year in review, talking about how much sort of rates revenue is, and our debt. And I mean, we're a sizable business. We've got $3 billion of assets. We have an expenditure of about $224 million. Yes, we do have a surplus, which was higher than we had budgeted for. But in terms of actually delivery of an understanding in terms of our rates, revenue, etc., rates makes about 45% of our total revenue sources. There are development contributions, fees and charges, subsidies, and other income, as well as vested assets. In terms of the performance, we've sealed about 84 kilometres of road. Over just under 6,000 potholes have been repaired, including over 1,000 following the May flooding event. And we're sort of doing quite a lot of work in the roading area. One highlight is the LED light conversion for our street lights, which has reduced our power bills and reduced our CO2 emissions, and has made significant savings. Some other interesting facts. I mean, there are over 16,000, well, nearly 16,500 dogs being registered, which is a lot of dogs. We have, my understanding, quite a lot. One of the highest proportion of dogs in district per capita, and we have over 1 million people visiting our community facilities. So that introduction is very much an overview of our performance, and then, as I said, part 2 is very much a review of our services in a bit more detail, and I'll take it as read rather than going through all of that section by section.
Shall we pause there and ask questions and comments around sections 1 and 2 before we move into the financials? Any questions or comments for Rob and team around the first 2 parts of the annual report? Mr. Gimmel?
You'd be surprised if I didn't. So. Look, guys, I just want to again congratulate you on the production of this annual report and the front end. Given where we've come from, it's been a monumental effort. I just wanted to reflect on the front end of this report. It strikes me that this is the contract that the council has with the community. You know, we're reporting on stuff that we said we were going to do and how we perform against it. And I was just wondering, and I was talking to Alison before, and we're probably going to talk about this with you, Derek, as well, about whether or not reporting on it once a year through an annual statement, set of accounts is the appropriate way to do with it, or whether or not we could be a bit more dynamic. And through the use of some of the AI tools available to us, we could actually have a dynamic reporting process around these sorts of things so that people don't have to wait till the end of the year to see how we went, you could actually work out on the way through the year how you were going, because there's nothing in here, in my view, Derek, that's confidential. This is just a progress statement. And if we did that, then probably you could remove it from the annual statements as well, Chair, and you could actually leave the financial statements or the annual accounts at a level which is more commensurate with a commercial set of accounts. And I just want to reflect on that, and maybe we could work towards it, because I don't think we were in a position to do that until now, until we get it to a point where the annual accounts are pretty clean and we're all working in the right direction. So I think, and maybe Alison, you were starting to reflect on this anyway, but we could actually have a more of a dashboard reporting environment, and that means that there's less pressure. But the other thing about it is it's informative as well for council on the way through, because you can look at it and go, well, we said strategically we wanted to do this, we set some aspirations, and now we're working towards it. And that's when you're looking at it, what we're doing, are we getting behind, are we getting ahead? How do we then govern at that point? Because I always think an annual report, as you say, it's too late at that point to have much of a impact. So while I really appreciate all the work that goes in here, it's kind of, would it be more usable if we actually had like a dynamic annual reporting process? Now, I know that might create some issues in relation to getting a test on it, Derek, but the reality of it is they would be drafts up until the point where you actually finished your work at the end of the year. I just wanted that sort of kind of to start to sink now, because it might form part of your potential planning in the future.
Do you want to comment on that, Sharon?
Yeah, thank you. Thanks, Mr. Gamble. I think, look, that's something as a team that we've been working towards probably over the last 4 or 5 months now. We have been a traditional organisation that's focused on financial performance solely, and then every year we do a summary of how we've gone against achieving levels of service, the things that community actually see. And through Rob and his team that he's now building, we aim to, and I don't want to let the cat out of the bag for the chair of the Finance and Performance Committee next week, but we will be looking to bring more of a balanced performance report in public to the community on a regular basis that doesn't just talk about how we've spent money and how we've gathered money, but what that money's gone to fund, what services we've provided, what experiences we've provided for our community, what infrastructure we've built, where we've built it and how. And that is, it's not going to happen overnight. I mean, this is a quite a shift for the organisation, as you appreciate from the changes you've seen in this annual report. But certainly we're aiming within the next 6 months to be more of a balanced performance report, so we don't surprise everyone at one time every year to say this is actually how we've spent the money and this is the service you've got. So we're onto it.
I was just going to add to Bruce's question to you, Derek. I'm assuming it's an and, not an or, though. So that section 2 with the SSPs and the Statement of Service Performance Indicators, it's obviously a PBE requirement. Will we ever get to a position where we can reduce,
Yes,
so it becomes an or?
Currently, there's a lot of legislative requirements in terms of what an annual report needs to contain and the format of it. So it's a lot of it's driven by the Local Government Act. So that's probably quite prescriptive and restrictive from an annual report perspective, but it doesn't say that it prohibits you from doing anything else outside of that, which I think is probably where
I would challenge you, Derek, that we don't need 142 pages of performance reporting. We need pithy dashboard reporting that you can get some clarity around, because there is quite a bit of written word in here that I believe that you could represent better on a dashboard, a pithy dashboard. And the reality of it is that we should be prepared to push the boundaries a little bit for the sake of better reporting and clarity. I'm not saying that look, well, if you take it, when I read this, and I read it from cover to cover, you do get halfway through and start to lose the will to live a little bit, because you are reporting the same sort of thing. So I'm not insulting the team. I'm saying we could actually make it quite dynamic, and we could do that on a monthly basis or even on a revolving basis, so that by the time you get to see it at the end of the year, you've actually already really familiar with it, and all you're really doing is getting a reinforcement of it. We should probably work together on that, though, Derek, because I can see you giving me a look there like, well, I don't believe you.
No, I'm all
Trust
for
me. Trust me.
Lydia.
I think it was just reiterating this, and it's a big book, and so Bruce probably isn't wrong in his assumptions about it. But I think that is where I've had lots of conversations with the team around looking at our reporting and how we're reporting back to our community and doing it more often. And so I think that finance and performance is a good place to do that, so that we can actually start showing people what we are doing throughout the year, rather than I'm just thinking, before I was on council, I wouldn't pick this up and want to read this. And so it's how can we actually communicate with our community in a way that makes sense, it's easy to read and understand of what is going on, rather than having to trawl the books in this. So that's where I see finance and performance will really step into that great space
At the risk of
showing that.
At the risk of, what I don't want to do is, and I wouldn't have probably said that until I knew it was capable of it, but you don't want to go and spend $1 million developing a program that draws information, but the AI tools that are available to us now are starting to make these kinds of things easy. And the council, as I've said before, has one of the biggest data lakes in the community of information, and the interrogation tools we can start to use those more dynamically, and there are examples of it. Once you get them up into a reporting protocol, there's no reason why ratepayers couldn't interrogate that reporting protocol on a regular basis. And if you want an example of it, although you can't see it yet, but those that are shareholders in the Central Plains Water Scheme can start to see this sort of thing happening as well, dynamic reporting around what they do. So if you want examples, we can point to them now without having to recreate the wheel. So I would be quite encouraged by some of the work that's going on, and there's no reason why we can't start to do it.
Thanks, Bruce. I love the fact that you always challenge us to push the boundaries, and thank you for the recognition of the evolution that we've been on. In part, we do have a Local Government Act that we are required to meet those requirements, but I think there's a balance here about how we do those things. So you've heard from the team that we're having thoughts and discussions, have been for the past 5 months, about how we can do things differently. Until the Local Government Act changes, we will be required, otherwise we will find ourselves with emphasis of matter if we produce an annual report that doesn't meet the legislation. So we have to tread that fine balance. But I also think there's an opportunity here around communication, and in terms of, absolutely, I don't think anybody would disagree, the annual report is really hard to read. I think there's a place for, not only through the finance and performance meeting, which we discussed around a balanced scorecard approach, but actually also providing a summary over the top of the annual report that is easy to read and that gets the key points across. So I think we can come at this from many different points. And love the fact you want us to push the boundaries even more, but can we just acknowledge we've got this far in terms of no emphasis of matter, and we'll continue to evolve.
Legislation doesn't drive good communication, though. We can do better here, a lot better. Don't disagree with that. And obviously you take that advice along the way from Eric about what you can and can't do, but it can be a lot more tricky than it is. But we've been around annual reports and compliance and legislation for a long time.
Tracy, you had a question?
I'm really heartened by what Bruce has just been suggesting, and by Steve's response. And I completely understand that there's a legislative framework there which is designed to give assurance to the ratepayers. So yes, we walk the line between the two. What I will say is that well done to the team for bringing that in on the 31st of October, and apologies as being one of the reasons why you didn't meet 31 October, so recognise that that's not on you. But one of the things that's really important here is there will always be people who don't trust councils, just like there's always people who don't trust governments and so on. But we've got to do things not for the 5% of negative voices, but for the majority. I am not a finance person. I'm not an accountant or an auditor. I think it's really important when we are communicating on things that are finance related that we run them through a little panel of people like me who can understand things but don't have a mind that works in spreadsheets and numbers, so that what the end user, our residents and ratepayers, are getting is in a form that they can understand it without it diluting enough to change the regulatory requirements. So that's my comment, so thank you.
Sophie, did you have a comment?
Yeah, mine's probably a bit more of a minor question, because on the recommendation, J is around alterations of minor effect or correcting minor errors. With the rather large amount of text that Bruce has highlighted, there's a few things where you sit there and think, oh, bit of a spelling mistake, or that might be explained in a weird way. Should we just email those to Sharon if we would like them to be considered for correction or rewording? Yep.
Yeah, that would be the best approach, and these will appear in a schedule for the council meeting itself, so that there is a clear record of what changes have been made. But if there are spelling mistakes, we probably won't keep those. It'll be anything that's getting closer to the material changes.
Thank you.
Great. Okay, well, before we wrap up sections 1 and 2, the only comment I had was a little bit like Bruce. I did read page for page because I do enjoy reading annual reports. And you learn, even after 5 years, I'm still learning. I figured out the other entry of the vested assets. 5 years it took me to figure out the other entry of, I was like, revenue, but it's non-cash. Anyway, I didn't know. I did know that, but so you're always learning something, right? But when we come to the SSP, so the Statement of Service Performance, there are a lot of them. So I think it's a balance of conversation between Sharon and Bruce around do we need as many? Because my question or one comment was that they're all achieved. So I recognised, in developing your SSPs for the first time, it needs to link to your strategy. It needs to be something that has a prior year measure, and it needs to be something that the auditors can easily audit, so they can actually say, yes, you have achieved this. But then at what point do we, have the resource and the time and the energy to change our SSPs because of all of that? And actually, are they actually almost stretch goals? Because when I ran my eye down them, we'd achieved everything. So, at what point do we do a refresh and go, do we need some stretch SSPs? But again, it kind of ties into what you're saying, Bruce, around.
Yeah. So if I may answer that. So as we mentioned at the start, this is a statement of performance against year 1 of the long-term plan, which was set up and approved in 2024. The next time the council gets to change those is going to be the development of the next long-term plan, and the team will progress that work and start that work with the new council in the first quarter of next year, and we'll start talking and laying out the plan of attack for developing the long-term plan. Within that, we will then look at the levels of service and the service statements, and we can then address that matter with the council and go, well, this is how we've done it in the past. How do you want us to do it in the future? And I know the team will also be looking at those level of service statements going, do they actually reflect the service we provide, or are they the things that we can count? And that's one of the challenges with getting accurate levels of service, and we'll be workshopping that with the new council.
Okay, if there's no other questions or comments, are we comfortable to move to the financial section of the annual report? Great, thanks. Back to you, Neil.
Thank you. I'd just like to add to the previous conversation that Derek and the Audit New Zealand team kindly shared the model financial statements that was refreshed by the OAG earlier this year. I believe it's the first refreshment since 2021 or 2022. And as finance, we adopted those model financial statements. So it wasn't done in all in one go. We started adopting it earlier this year with the help of Audit New Zealand when we adopted the FY24 annual report, and we completely adopted to the model financial statements for this annual report that you've currently got in front of you. So thank you for that. In terms of the performance, the financial performance of council, in the financial statements, you will see a council view as well as a group consolidated view. Probably the key differences between what is presented on to the Finance and Performance Committee is the fact that the Finance and Performance Committee gets reported on mostly at an operating surplus level. The main variances between what's reported to F&P and in the annual report are your year-end adjustments. So you'll have, as Derek explained, we'll have annual revaluations of our assets, our investments, of our shares, unlisted shares in companies, depreciation, contingent liabilities that we might need to provide for. So there's quite a significant portion of year-end adjustments that flow into the annual report. So at an operating surplus level, council exceeded its budgeted surplus by approximately $12 million on the face of the P&L. And then added to that, you get your financial accounting adjustments to reflect the increase in the fair value of your shares, the gains on the uplift in the value of our assets, and that brings us to a total of approximately $199 million in profit. But as I mentioned, the variance between that $29 million operating surplus and that total 199 are accounting entries due to increases in fair value. At a more detailed level, revenue exceeded the budget by $13 million. That is most significantly due to an increase in our vested assets. So vested assets are assets constructed by third parties and vested or given over to council to operate and maintain for future purposes. Expenses was in line with budget, which is really good management from everyone at council and specifically the ELT. With regards to the statement of financial performance, as mentioned earlier, we currently have about $3 billion worth in assets. And in terms of the most significant variances on the balance sheets, probably between cash and borrowings. So as we've disclosed in our previous Audit and Risk Committee papers for Treasury, due to favourable interest rates and the fact that we have Selwyn Water Limited transfer coming up in December, and the fact that debt will be transferred, and we had some bonds and papers with the LGFA that matures in December and April as well. Management felt that it's best to hold on to some cash to be able to repay that debt, but also look after debt that will mature that needs to be repaid. And as a result, our cash and cash equivalents were materially higher than budget, and as well as the borrowings. If we refer to note 29, we also have a more detailed description on the variances to budget. So you can refer to that for more detail. And then we also have a new disclosure with regards to local water done well that just explains the process that council have followed to establish the new water CCO, Selwyn Water Limited, how the establishment costs have been treated, as well as the working capital facility. Open to take any questions.
Questions, comments? I'll start off then, and then you can warm up. Apologies, this is a granular question, but it's just me, again, learning after 5 years. So vested assets and developer contributions. So I noticed that there was a variance to budget in both. I think the explanation, I read in one part there was an explanation to the variance, I think it was to the contributions being that, the negotiation of the rate. But then I also read in another part that that can happen kind of 8 years out. So therefore my question was, how come we can't get the budget closer. And how also, just for my own learning, how does that negotiation on the contribution bit work? Because I don't actually have an understanding on how that bit works from a...
So as mentioned earlier, the budget reflected in this report is based on LTP year 1. So the development contribution rates used was for year 1 of the long-term plan. Traditionally, what we've seen was that the developers, they submit a material amount of applications in the month before the new LTP is adopted at the older rates. And then dependent on the type of development, it could be that rate is secured for, as you mentioned, 5, sometimes up to 8 years' time. We did a detailed session with the Finance and Performance Committee on the 5th of August. That's also made publicly available, and we talk more about it with the rest of Council in tomorrow's Finance Deep Dive. So that's caused the variance in the rates used in the annual plan versus the actual rates when those were invoiced. Then we can't accurately forecast the timing of when developers would submit those resource or building consents. Secondly, we also have developer agreements in place. So when a developer agreement is in place, a developer will undertake the work themselves and they will vest those assets. We can't accurately forecast that as well. So that's why you quite often have the swing between your vested assets and your development contributions, because if a developer chooses to do that, we receive the built asset and it's recognized as a vested asset versus it might have been budgeted as a development contribution.
I understood the timing bit, I just didn't understand the negotiation around the rate. But no, it's useful context. Bruce.
Yeah, just following on for that, I always think that development contributions are, in an organisation like this, and infrastructure assets, they are a barometer to the velocity that people want to pick up the use of your assets, because really what you're asking them to do is contribute to an asset as built, you know. I know there's other nuances, but you whack it in the ground and then people hook up to it, kind of thing, and they pay a contribution to hook up to it. And then if they slow down, what normally happens is that people have paid their development contribution effectively, then they build their asset and they vest their asset. And what appears to be happening here is that we might just be having a little bit of a slowdown in terms of those hooking up, but our vested assets are increasing, have quite a velocity this time. So it means that there was quite a bit rolling into the balance sheet. And interestingly enough, I looked at it and I thought, well, okay, on that basis, maybe we didn't make as much cash as we should have, but we're still, really quite heavily pregnant on the cash we're making. So I'm looking at, so this is in pretty good shape, because the other way you monetize vested assets, obviously, is they come into the balance sheet, you don't get any cash for them, but you can then it increases your capacity to borrow because you know that they're being used in that environment. So from that, the only thing that did was a little bit of a red flag and a question, and it's probably to you, Sharon, but the team as well, that is this a flag that given that development contributions are slowing, is it a flag that we're potentially seeing a slowdown? We're seeing a slowdown in the Selwyn in terms of developers wanting to develop, or is it a flag that we haven't got the capacity on the lines that we've got, so they're waiting, or is it that we've overbuilt and I'm not sure. So just my question was: is the velocity of development that we have become used to experiencing, is that still there?
To pop off so I can. Oh, thank you. Yeah, really good questions, Bruce. And look, there's a variety of things happening. Actually, we're seeing the builds pick up. I just met with a couple of developers this morning, and actually, what we've had a flatter period after COVID. What we are starting to see is those numbers start to pick up. Along almost heading to some of the pre-COVID times, which will provide a challenge for us in terms of, if we think about the long-term plan and our infrastructure plan, what we're starting to see happen is that actually developers are starting to build faster than we had prepared for in our long-term plan, which is going to potentially give us some challenges around connectivity. And that's a piece of work that we will look at with regards to Selwyn Water. And what that means in terms of investment for Selwyn Water, particularly with regards to water infrastructure. So we've had a bit of a drop off. We're seeing it pick up again, and I think really what I'm going to be particularly interested to see is with the RMA reforms and the changes away from DCs to levies, what that will bring, because we know that growth doesn't pay for growth. We know that there are some challenges related to that, and I'm really looking forward to seeing what the reform will be around the levies and what does that mean for those continued developments for Selwyn. And having seen some recent data, the growth is continuing, and there'll be a quarterly report come out which shows that Selwyn's continuing to lead the country in terms of growth.
I've got a follow-on question from that, which is I actually find the explanations within the annual report really useful when it comes to kind of painting the picture around financial spend through the year, debt levels. So when we get to page 164 of Diligent, I found the graphs there really useful. I'm not sure which graph is most useful. I kind of looked at all of them, but the one I kind of jumped to was the balanced budget benchmark graph, so page 164. And I made a comment in my notes going, does this mean we are washing our own face? So if we take away, because that graph, second graph, takes away development contributions, invested assets. So if we think, I mean, not anytime soon, hopefully, that growth will slow down, are we still washing our own face, I guess I should say, from our working capital? Is that what that graph's telling me, Neil, around that balanced budget benchmark? Is that the best graph to look at from we're balancing our books, to kind of put it in layman's speech?
Correct. As stated in the first line, the revenue amount used in the graph is excluding development contributions and invested assets, to name just a few.
Sorry.
For you, Sharon, in relation to what's going on here, is that there's only a finite number of people in the Selwyn area, right? And the reality of it is that it's going to become unaffordable for those people that live in the area to be able to fund the infrastructure of those that want to live in the area. And you can borrow to a certain extent in anticipation, but you don't want to get too much ahead of yourself, because if they fail to arrive for whatever reason, you're going to be sitting on a big chunk of infrastructure, which is then going to have to be distributed. So that was what I was talking to. Are we seeing, what you're telling me is we're seeing the lag, we're probably seeing the tail end of the COVID slowdown. And with a potential wave, you're going to have to be really careful about where you send those people in. There may be a chunk of disappointed, very, very outspoken developers. Who knows? Yeah.
Thank you. Look, absolutely, Bruce. And I think if we look at the challenges that every council around the country faces with regards to, we've got fast track reform that's coming out. And that fast track reform, when we're thinking about the future, that may change how councils are able to plan where infrastructure goes. If the reform fast tracking comes through that takes away input from council, we may find ourselves with builds going in places that we have no infrastructure, and we may have no say over where those builds go. So that is problematic, which is why we're really wanting to see what the reform looks like and what the fast track bill is going to come out looking like, because absolutely We don't want our community to have to be paying the cost for those that wish to come and live here. Secondly, I would say that it's a piece of work that we're very well aware of, and we're working with Selwyn Water because we know that connectivity, and already we're working with developers. There are instances where we have to have developer agreements for some places and specific builds because developers are actually building faster than anticipated, and that can be, quite challenging. And with regards to development contributions and us washing our own face, the team have done a great job pulling the operational budget back in a way that hasn't been seen for a number of years. I think historically council has always relied on the development contributions to make the bottom line look good, whereas now operationally we're actually starting to stand on our own 2 feet, and that's exactly how it should be.
Answer to my question, Sharon, pretty much. Good summary. Sophie, did you...
Yeah, I did have a question. No, it was really interesting, so it was all good. It was actually regarding development contributions as well, to be honest. So in the explanation note on page 158 of the annual report, or the draft rather, there's a line that says, it talks about what is reported in the development and financial contributions line, and mentions about how they are recognised as liabilities until such time as the council provides or is able to provide the service. And I was trying to find where they're recorded as a liability, or am I just not experienced enough with accounting statements? Because I couldn't find it in the liabilities section, but it could be absorbed within somewhere else.
That is correct. It is absorbed because at a total council level, currently including the development contribution balances to be transferred to SWL, it is actually an insignificant number, and but that report with the finer detail will go to FNP at the next meeting.
Cool, thank you. Look forward to reading it. Cheers.
Lydia, did you have your...
I guess my questions around this probably lands into a wee bit of this as well, is the valuation of the assets there, and particularly I'm looking at the 5 water assets, so the misstatement that was there. And I mean, just in my mind it's flagging, what is the effect on Selwyn Water Limited transfer with those misstatements? Is that going to come back to a report for us? And I'm probably noting that yes, it will eventually, probably in the wash-up period of the transfer. But I think I'm just trying to look ahead of this and go, what are the actual red flags for us in this organisation around valuation of assets still remaining in the organisation as well, and what were the material changes in that?
In the version you have in front of you, between staff and Audit New Zealand, we've got reasonable comfort that the dollar value is complete, materially correct. In terms of the actual transfer, in December we will be doing a briefing with updated values as at the 30th of October. The AMS team is currently in the process of updating and capturing the detail required to do a full revaluation of all those assets as part of the wash-up after the 18th of December. So for the final net asset value to be determined, to determine the number of shares to be transferred, that will all be revalued prior to the 30th of June.
Okay, cool. And then I think it lands into the other space of the valuation of our investment properties, and will differences be shown through our finance and performance subcommittee in our investment portfolio or property portfolio?
That paper does not sit with me, but we can certainly look into it.
Okay. Thank you.
Bruce?
Just for clarity, Chair, and probably responding a bit to you, Lydia, the way I read it, and I just want to confirm this with Derek, the way I read it is that we had a chunk of completed assets that had yet to make it out of WIP and onto the ledger, and it was so we just hadn't transferred them yet, and you've corrected that through journal, correct?
Yes, they weren't captured in the asset management system.
Yeah. So that work in progress as opposed to otherwise, and you wanted them reclassified. Is that what you're talking about?
No, there were assets not completed but not captured in the asset management system.
Was the work recorded anywhere?
So in terms of the finance and performance reporting that is presented regularly,
Yeah.
it is done on from the financial system. So the work in progress and the actual capitalizations were captured in that.
Yep.
The final balance that we see in the annual report is based on the valuation done by our external valuer. And the source data they used to do the valuation was incomplete due to the lag in the capturing of the asset management system data. So that's why we...
Yeah. Yep. No, I get it. Okay. Yep.
One final question from me. It was just, I remember back to, I think halfway through the year, we had an insurance workshop. So just when I was looking at page 239 of Diligent, which was the insurance of the assets and obviously the value of some insured, what was the outcome of that? Because I think the whole corridor of that workshop was, taking a risk-based approach, and I mean, I might have been quite tight timing. Actually, it might have been after balance date. I'm not sure. Was the workshop after? I was just wondering whether there was any outcomes from that workshop that are reflected in these numbers, or whether we might have missed cut off because it might have been post 30 June, maybe. Can't remember the timing of that.
So if I may respond to that, our insurance renewal period aligns with our financial year end. So the insurance strategy sessions we had only made an impact on our FY26 insurance premiums.
Any other questions or comments in relation to the financial section of the annual report? Otherwise, I am going to try and read off the screen and make a recommendation. I can't really see from the light, sorry. That the Audit and Risk Committee receives the information in the Audit and Risk Committee report, draft unaudited annual report for the financial year ended 30 June 2025. We note the draft letter of rep for the financial year end 30 June 2025 to be signed by the Mayor and the Chief Executive at the Council meeting on the 26th of November. And we note the draft independent report, auditor's report that has no emphasis of matter, close brackets, which will be finalised on the 26th of November 2025 following the letter of representation being signed.
Excuse me, Madam Chair, just for procedure, do you want to include the closed brackets comment into that recommendation? Okay, so just leave as is. You're just making us... Okay.
As it is on screen, so I'm just reiterating that comment. So therefore, can I have a mover to make the recommendation of the annual report to go to full council next week? Thank you, Bruce. And a seconder, Lydia. All those in favour? Any against? Carried. Celebrations. Well done, team. And apologies, Rob. Please it be noted there is more to the annual report than financials. So, yeah, very much so to your team and others.
And look, if I may just add one final comment, sorry to belabour this, but we also want to extend our thanks to Derek and his team from Audit New Zealand. I think, as he's noted, we've tried really hard this year to be an easy partner to work with, and we also really appreciate, Derek, your leadership and your team's approach to the audit as well. It's I think it's been a joint effort to make this outcome. So thank you very much to you and your team. So I've got the next report. It's the executive report. I'm going to take it as read, but just want to touch on, obviously we've talked a lot about the annual report. I've touched on the work going on in the annual plan, and next week, tomorrow actually, councillors will get a briefing on the prioritisation work that the team have been doing in the development process of our annual plan, and that will give you a sense of how we're structuring our budget, how we're bringing it together. And that will then lead into a 17th of December briefing for Council on what is looking like the first draft annual plan for you to give us direction on as we head into the summer break. The second point I just want to touch on is in the section around the report on the Treasury policy update. That was one of the actions that was noted in on page 5 of your papers we touched on. This will come to the next Audit and Risk Committee. It's just related to the Selwyn Water Limited and the debt transfer. So because there's a connection there, we can't finalise it until that piece is done. And so the team have just noted that there is a delay to that work. I've attached the Audit and Risk Subcommittee work program. Now this has been something we've developed, which is basically on one page giving you a reflection on each meeting, what you're likely to see. And so if there's any feedback, you can give that to me afterwards around any changes you wish to see to that or through the chair. And finally, on the people update, we've just given you an update on the staffing numbers and some of the things that have occurred within the people space. There is a briefing next week around the Tati Tima engagement survey, and we've got an external person who's going to come in and work with me to give you an update on what those results mean for your team. And just also a lot of work going into the holiday pay remediation. This is a change and an impact that's affected many organisations across the country, and we're getting towards the finalisation of this piece of work, and so we're hoping that we will be through that early in the new year. Happy to take any questions, Madam Chair.
Questions, comments?
I've just got a quick question, Steve, on the people update, where it says the about the crossover of employees to Selwyn Water, and but the net increase is 15, and I just wondered if you could briefly talk to that.
Yeah, so and Kylie will probably be able to give some more specific details, but I think we've seen as an organisation changing and moving. We're seeing, we're continually having to do slightly new and slightly different. And so whilst we're transferring across, we're also adding on to other parts of the business. So Kylie, do you want to give us a sense of where those changes have occurred?
Yeah, so just to confirm, we have had at the 1st of September, those 22 staff moved across to Selwyn Water Limited, but across the quarter we're still seeing a growth in the number of staff. And there's a couple of things that will play into that as we start to, say, increase our summer with the summer pools opening and things like that. So we do go through periods of time that we are still increasing the number of staff across the council.
Any other questions or comments?
So I just might, I think in terms of, we've got a dashboard that breaks this down on a more granular basis, and what we can do is find a way to get that through to the councillors so you can have a look.
This is just really just a bit more for completeness, and it was around the Treasury policy updating and the endorsement from here, and then that will then go through to our LTP space. So just for completeness, not looking at annual plan for Treasury policy, it'll be through to the LTP consultation. And then my only other comment is that the work program is really helpful to understand and have oversight into that, and I just wondered whether it actually just stays on the agenda after the terms of reference or something, just in the body of the agendas for visibility for people in that space. Would be really great.
Great, thank you. I only had one comment. Maybe next time if we do receive the engagement survey results, I know there'll be, the measure of engagement. There's various categories, and it might be, I'm not sure, it might be a continuum of 4, but it might be, not engaged or completely unengaged, engaged, and then. But the measure you've given us might be a little bit misleading because there might be another category that's close, but it doesn't mean that the other 45% are disengaged, because you know how I think in the people language speak, disengage is a dangerous measure, but it doesn't, but the bit in the middle is not actually that bad. So I just thought maybe next time we have a measure on this, maybe just include the whole continuum of measure, just so that we've got a true picture.
Kylie may have more to add to this, but I'll have a crack as first. That the briefing that will occur next week with Michelle Shields, who's our she's an organisation clinical psychologist, she'll come in and give a bit of a run through of the data, and she'll talk to what these findings mean, both in the context of our organisation, but also our organisation in the context of the broader local government sector as well. So there'll be a bit of a fuller explanation on that. Kylie, any add to add?
Yes, sorry. So there's two different measures here. One, the 56% is a measure of just 3 questions. So the people experience measure is a measure we started last year that we're now using because it measures 20 questions across an experience that our employees are having, but it also gives us a comparison with other local government. So going forward, that really is the measure that we think gives us a greater indication of the experience for our people here as well. But Michelle Shields at that briefing will be able to provide a bit more information about that as well.
Right, thank you. No other questions or comments? Can I have a mover of the executive, please? Thank you, Tracy, and a seconder. Thanks, Sam. All those in favour? Right, perfect. We're doing for time. Health and safety and wellbeing.
So whilst John makes his way to the table, I'll touch on this, and I'll probably talk to a couple of the attachments that you've received there. So back in 20-something or other, we got a review of health, safety and wellbeing here at the organisation. It was the impact report, and over a couple of years we found that there wasn't a lot of ongoing traction and oversight. So last year we commissioned a second report. This is what we call the HSC Global Report. They came in and they re-reviewed the council's culture and our approach to health, safety and wellbeing, both from an officer point of view, but also from a staff and a workplace cultural point of view. And that report produced a series of recommendations, and one of those was actually the creation of John's role. It also required us to do a few other things, and one of our commitments to the council today was that actually we wanted to not just tell you how we were going and say, oh, everything's good. We actually wanted them to come back in and do a review and a check on how are we going. Did we do everything we said we would? What's the place like after 12 months? And so we commissioned HSC to come back in, and they were in play earlier this year. They came and talked to our staff. They went around a number of our facilities, and the result is the attachment you have here, which gives you an overview of did we do the things we said we would, what other things that are still to go on. And that is an attachment 2 on page 293 of your board books. I think it'd be fair to say we're pretty proud of the effort and the results speak to that. And so thank you to John and his team, but also to all the leaders in our organisation who've really taken on board and embraced our work around health, safety and wellbeing. I think the positives speak to themselves, and I think too also we're not surprised about where those improvement opportunities are, and this is just a case of us continuing to mature in a health and safety and wellbeing approach. We are going to take another opportunity to brief and workshop with council the officer obligations in particular, and go into more detail about what that looks like and how you can influence health, safety and wellbeing here under your officer obligations. And I think this is actually, it's good to have this test. And John, do you want to add anything on to what this means for you and your team?
Kia ora, Madam Chair, committee members. The feedback that we have received really does support the actions that the council has taken and driven out of the HSC Global Report. It also substantiates the substantial progress achieved by the council overall. The amount of work put in by the health, safety, wellbeing team across all functions, and the fact that all of the functions within council have also stepped up into another realm of health, safety, and wellbeing. For us, it's absolutely essential that we get third-party overview, audit and risk committee overview, not just us saying we've done well and we are doing well, but also those independents that can actually come in and go, yes, you actually have done some really good achievements. There are some other things that we are looking through and the actions that we need to do. But overall, it has been a really big year for our team and another year coming up.
Thanks, John. We have the dashboard here, which is just, again, as you've seen, Madam Chair, and the committee members who have been here in the previous term have seen the iteration and the improvement of the way in which we both report and track our lag indicators, which is the things that have happened, but also the way in which we give you some confidence that we're looking at the lead indicators, which is what are the things that we have in place to prevent or mitigate injury, illness, or anything that might come up that needs attention under the health, safety, wellbeing banner. So I think we'd be happy to take questions from this point.
Yep.
I might actually, John, get you to, because we've focused that corridor on the independent report, which is great, but I'd still, given this is the first quarter and we've had a quarter, first triennium of this Audit and Risk Committee, if I can get you just to do what you normally do and talk us through your dashboard, so the health and safety wellbeing activity for the quarter,
Yep.
So that we can base any questions from that activity.
Yeah, sure. So the overview around worksite visits, the program is really great. It provides insights for both councillors, elected members, ELT, but also for health, safety and wellbeing against actions that we can track and actually fix. We've had a couple this quarter around the digital team undertaken with councillors and staff. We've also had one with the building team on site, and the opportunity to go out and actually see work is done versus work is imagined cannot be taken lightly. We have also undertaken training and workshops for the last quarter in response to some challenges around staff interactions. With customers, we've held a community engagement and safe management of meetings. The sessions in November have been really good. The feedback has been really great. So we'll be offering those as needed going through the next quarter. We have also our GIS location of interest layer. Now this provides a significant piece of work that provides improved staff safety by engaging with the public and identifying locations where the risks are for us conducting work. We're pretty proud of that with our GIS people. Under our health and safety management system, a couple of incidents, one with critical driving happened with a staff. It was a non-injury accident. You'll see in the report the attending police of the opinion that there may have been possible factors including driver error and sunstrike. But subsequent to this, there was a independent driving assessment, standard procedure for when we do these things. Although no remedial training was deemed necessary, the health, safety, wellbeing team continued to use such events to key reinforce our driver training modules. So this particular occurrence, we're also factoring around fatigue and how we monitor that, what actions we drive out of that. Also our critical risk, aggression and violence towards staff. We continue to receive reports of verbal aggression directed at our sole parking attendant, parking warden during parking compliance activities across the district. So as part of our risk management approach, appropriate lone worker devices are provided, procedures are in place to support the staff safety, and it remains under active review determining whether any further measures are required to ensure the wellbeing of the staff in this role. We've also had a review meeting with our co-leads of our critical risk teams to assess the program's progress to date, including the challenges and opportunities for improvement. By the end of the year, each team will have its bow tie analysis and management standards formally presented and endorsed by the executive leadership team. And looking ahead to 2026, the focus will shift to reviewing those controls, the effectiveness and tracking progress. Under wellbeing, as we move into the winter months, we are seeing a slight decrease in our sick leave, which we hope will continue as COVID-19 cases decrease and influenza-like illness reduce. However, we are currently at a high risk of a measles outbreak and rising global cases. No cases, thankfully, detected in Canterbury to date, but that risk increases when people travel and people on leave coming back from overseas. But the most at risk are the tamariki under 5 and obviously pregnant individuals and those with a weakened immune system. MoleMap will also return during November to provide skin checks available to our staff who spend a significant portion of their day outside. Other staff can also access the service and get a reduced corporate rate and voucher for this. As part of our wellbeing, our Work to Ride program is a benefit program that enables employers to purchase bikes, e-bikes, scooters at a discounted rate. Since its launch in September, 14 team members have purchases to support active commuting. We're really proud of it. It's been a really good piece of work for my team to get into, and the uptake around council has been great. We're also looking at rolling out fitness passport, discounted access to gyms, sports facilities across New Zealand for staff and immediate family, including the council operated facilities. There is no cost in this for us. It is cost free. It is managed by Fitness Passport. And part of our mental well-being, it remains key focus within our health, safety, wellbeing program. Our Good Yarn workshops continue. They're actively promoted, offering staff the opportunity to engage in open conversations around mental health. Special input has also been provided by Dr. Paul Woods and Lance Burdett, supporting targeted areas of need. And they have been extremely great for our people. And in addition, our team continues to promote our TELUS health libraries of proactive resources and programs available both online and within the TELUS app, encouraging staff to support that aligns with their individual needs. Well checks have been offered to teams undergoing change or facing challenges, and providing additional support to help navigate these periods effectively. That concludes the report, and happy to take any questions around that.
Thank you. Questions, comments? Tracy, snuck in there.
I do have some questions, but I've just had to reboot my computer, so bear with. I'm very sorry to hear about an increase in violence and stuff and actions towards staff. And pleased that we've got something in place where we're trying to address that. And here it comes. Sorry about that. There was a phrase used about encouraging interest. Where is that? Page 279. About encouraging interest, and I just wondered what that meant, as opposed to who is interested. And if I could get this to work, it would be even better. Apologies, Madam Chair. Thank you. It says here that the session scheduled for November has received encouraging interest from teams across council. I'm just wondering how we measure what encouraging interest is.
Look, as part of our rollout of appropriate training,
Yep.
not everybody looks at taking it up. primarily we have had interest across all functions who want to engage with it. So for us, that is really
Encouraging.
topical. Yeah.
No,
more
I'm not,
than
I'm
that.
not,
Yeah.
I'm not
for sure.
mocking, I'm agreeing.
Because it's sometimes health and safety is seen as a drama because you have to do it.
Yep.
But these people actually want to be involved in
great.
it. So we're seeing some really good uptake, really good change in how we see health and safety wellbeing culture.
That's really
Great.
good. And it's really, as somebody who has an interest in process and people being safe, and process being one method of achieving that,
Yep.
really pleased to see this and to see the arrow diagrams.
Process, yep.
Thank you. There's no red in there. So, yay to the team. Do you think is there a danger of people feel, and this is not just for health and safety, Steve, is there a sense in the organisation that people are starting to feel over-processed, or are people understanding clearly the reason why these processes have all been introduced over the last couple of years? Thank you.
That's a great question. Look, I think John's touched on the approach we've taken with health, safety and wellbeing is it's not the mandatory you shall do or else, because we recognise staff have to actively work towards this, because ultimately it's not the training that's the material benefit, it's the actions after the training. And I think what we're seeing is the culture and the shift is just continuing to get more people are seeking this. It's probably because of all the work and the context of the work that's undertaken by councils as public servants in a public. That's probably where we're getting people wanting this support rather than being forced onto them, because they can see the impact. Certainly, as you know, you'll recall from when we briefed last week, the volume of change and the volume of direction setting coming at the moment to local government is significant, and actually we've got to build the resource and resilience of our teams around this. So I think that's probably, hopefully that's given you a bit of a sense of the answer and the context.
Lydia?
I always enjoy looking at the tables and graphs that you've got here, and I guess it's diving into it a little bit more. And I was just looking at, I'll use member of public events as the example. Are there times of the day or are there days of the week that you are seeing an increase in these events? Is there something common across the board here in that data, or is it?
Look, it is across the whole period that we are seeing it. There are peaks and troughs, obviously, after school events with children do come, but we can get that information if it's if you want to be more precise around that.
Yeah, and I guess it just leads into, if I look at worker events, is there a day a week where we are seeing more fatigue in people?
We can do that. We can dive into that.
Denise may want to add a comment on this.
It builds on the heat mapping information that we shared with councillors as part of the induction, which is there are times and days in some of our facilities where there is a lot more activity, and what you raise is an interesting, I guess, opportunity to compare and contrast that with when these incidents tend to occur, and I'm sure your assumptions around that would be correct, but it would be a useful exercise, and we're happy to do that, just to explore that.
And I think to add on to Denise's response, what you'll also find is the staffing roster and structure generally follows where these incidents, where the heat maps occur, where these issues occur. So the team are managing that with the resourcing they put in place and have available to them.
Thank you.
Sam?
Thank you. Near miss reporting, although I hate the term, because I think it should be called a near hit. Otherwise, if it's a near miss, it nearly missed you, it hit you. Down from last quarter by 11. Is that due to less reporting, or are processes working better than last quarter? Or
Across the board, we have had a reduction in reporting, but we also have had an increase in people doing workers imagined versus workers done really well. So we're seeing some really great uptake around that, but there's always room for improvement with reporting.
Yeah, it's always a thing that a lot of people do try and avoid. And aggressive or violent events towards staff. I was going to ask, is there a common denominator here? But have we noticed a downtrend since staff started wearing cameras out in the field, or not?
Not entirely, but this is a broad band of interactions with people. So whether it's emails or phone calls or interactions face to face.
And would they be predominantly face to face, or?
There's a whole range.
How long's a piece of string?
Yeah.
Oh, good.
Our customer service team have a lot of data around that.
Okay, cool, awesome. Thank you.
Sharon?
Yeah, thanks. I just wanted to add on a little bit to Tracy's question. What's also interesting in terms of staff coming on around the systems and processes, there's a lot more emphasis on psychosocial and health and safety. We're seeing that through WorkSafe in terms of cases that they're looking at as much more broader in terms of the psychosocial care of staff, and I think that that will come through in the Te Tai Tima survey that's been undertaken, and the linkages for staff about that sense of their psychosocial well-being being looked after. And that has helped, I think, with some of the uptake and responses from staff recognising health and safety.
Sharon? Tracy?
Yeah, I'm back because I've recalibrated my brain to the thing. I just got a couple of questions, John. One is that in the survey that was, the assessment that was done, external, there was a comment about there being a working group of staff that went for 2 years and it didn't achieve anything. So that kind of ties back to what I was saying about, like, how are we combating the danger of people seeing it as, oh, well, I've ticked all those boxes, now I can go back to work. So I have got another question after that, but I'll let you answer that first.
Look, that is an active action. We see that actions don't necessarily just get put into that box and signed off or put on at the back of the office. We're actively promoting health, safety and wellbeing as a team, following up on what we need to do. All of those actions are continuous. You know, we just don't drop them off and leave them. So we work on that.
Yeah, and I think probably the benefit of getting that review is it's actually made us look at the way we actually set that whole program up. We set it up like a committee. We set it up as individual work programs. We made it actually quite administrative heavy, and that's one of the things that John's looking at now is actually what's the actual outcome we're aiming for, and it's the ownership and delivery rather than a plan and a document.
Yep, that's great. The second one relates to the contractors. There's a comment here about South Freeze, Cord and Fulton Hogan. Their assessments were out of date. And I'm thinking, I don't know anything about South Freeze, but the other two are quite big organisations. So I was wondering why their assessments were out of date. And the second one relates to that, is a comment again in the external review that despite the size of our main contractors, there's concern that their systems and processes do not always meet the needs of their frontline workers. So again, I'm wondering, in our engagement with them commercially, contractually or otherwise, what are the steps that we're taking to ensure we're contracting organisations that do prioritise that?
Yep.
Thank you.
Yeah, look, those organisations, for us, it's unusual for them to be assessment out of date. Normally it's a procedural thing, a process thing. They've put it through, they just haven't sent the final documentation. Cord and Fulton Hogan, exceptionally good at maintaining their training across all of their function. South Freeze, a smaller business, the same process around. They value what they need to do for working with us, and from what we understand, it is just a process thing that they have had things in place, but just haven't had the final documentation to us.
And the other one about contractors not meeting their obligation?
Yeah, we have a procurement head of procurement in place now. So what we are doing is tying in how we assess and pre-qual contractors. There are contractors who don't see value in doing that, so we have alternatives around that.
Bruce?
Thanks, Chair. A couple of quick points. I wouldn't beat yourself up too much, Steve and John, about the progress you made or perceived not to. I think you've done, as you say, a great job. You can overwhelm people with trying to make too much progress too fast, and that's a process issue. There is just one issue, though, that is a little bit concerning, and that's in the needs improvement space, where there was a conversation about your critical risk assessments getting a bit mired down in process. If there's one thing in an organisation that I think everyone should be concerned about is a lack of progress in that particular area, because those are the areas where you've identified where everyone is at most at risk. And so the question would be sort of how we're washing all that away to make sure that we're actually getting that back on track.
Yep, we've taken that on board. We've had a number of discussions with some external advisors around our critical risk, and that's, as part of that, our review next month will ensure that we trim down what we need to do. At a recent conference, we've had some feedback around critical risks with other parties who are starting on their journey around critical risks. So we were able to offer some advice around that, but there are other staff who were able to offer us some insights to how they actually continue to improve around critical risk. And as I've said to people, critical risk is a huge undertaking project, especially for council. But we are actually putting a better lens on it and understanding and getting our staff to understand critical risk. So as that becomes embedded across staff, I'm sure we'll see a better improvement in that, Mr. Kimmel.
All right, last few comments, Sophie?
Yeah, thank you very much. And it's good to see the walkarounds part there. So I have actually enjoyed walkarounds. So if they get to continue, then totally encourage you to take part in those. Get to see some interesting parts of the business and ask some really awkward questions sometimes. And sometimes they're just questions that nobody, if you're embedded in that section, then you've never thought about it because you're just used to it.
And it's big picture looking at,
Yep.
Sometimes we get too focused on what we do.
Yeah, but thinking around that, a lot of the reports, particularly the external report, it touches on quite a lot of things that are in different sections. Obviously, health and safety covers the entire business.
Sure.
And there's mentions of things around procurement with contractors and that sort of thing. There's IT, there's finance, there's people, there's radio coverage for the animal team and all that sort of stuff.
Yep.
Do you feel like you're making good progress with that? Because some of them feel like, you've got to rely on a whole spider web of people to try and mitigate this, but it still needs doing.
For us, it's the relationship build. We've seen really good uptake in us being out there and building those relationships. If we don't have a relationship, we can't communicate or cooperate or coordinate. And we're seeing, improvements around that every day, every week. We're having more interactions, we're having better feedback, and we're having better outcomes from actions, even if it's just a phone call or a quick passing in the corridor, and understanding and getting those actions closed out and offering advice. Part of it is not necessarily being able to fix it, but offering ways to have a look at those actions and controls.
Fair enough. There was one comment that I found quite interesting, and on Diligent, it's in page 305, which was actually in the sports, turf and reserve section around the called contract is complex and sometimes creates challenges. Council is seen as overly risk averse, sometimes to the detriment of community events. And it talks about culture shift and benchmarking progress. And it caught my eye because I do get involved in quite a few community events, and every so often somebody's like, they say we need a traffic management plan, or they need more fencing than last year. And there's always this question around how do we balance these things?
Yeah, and that's an ongoing part with having a look at our critical risks and what controls are effective. So there's always lessons learned within our team and across those teams to understand what is effective. You know, sometimes if that's the case, you know, we don't need to put up fences that are so high or so wide just because we're thinking that critical risk is quite excessive. So we do review those, Councillor, and always happy to take feedback.
And one last question, I promise. Sorry. There were a couple of mentions around Vault and whether or not it's the right software. Are there better alternatives?
Look, there's 101 different alternatives. Vault is really complex, and for us as a council, it really does fulfil our needs. We probably don't use it to our 90 percentile. We've just had some interactions with IdeaGen, who are the new owners of Vault, around how we use it. They have they actually categorically stated they had dropped the ball, and when it was purchased a few months ago, they're looking to improve how they bring training to our teams. So we're looking probably just after Christmas to bring a training regime into our business across all functions and get a better understanding for our teams on how that works and improvements to the software.
Cool. Good to know. Thank you very much.
Ka pai, good korero. I think when I said, right, talk through your dashboard, then it's another 30 minutes of health and safety korero, but it's exactly what we need to show that we have visual felt leadership around health and safety. Couple of final comments from me. All has pretty much been said. I'm probably going to pose the question back to you, John, and I'll pose the question and then I'll put my commentary to it. Is there anything in that report that concerns you? When I read it, obviously went through the dashboard and our quarterly reporting, and completely agree we've been on this journey of maturity. And you could read our quarterly dashboard and go, we're doing all these initiatives, doing all this great things going really well, and then you get to the independent report, and there was some commentary in there that kind of went, do I need to be concerned about this? Steve mentioned there was nothing in there that surprised us. So my question is there anything in there that you're concerned about? Do you need anything from us as your Audit and Risk Committee governors to kind of back you and support you? And I guess my last question, and health, safety and wellbeing, we always think about the safety element. Our Chief Executive is very good on psychosocial risk, and she alluded to it, but that's what's front and centre to me today. It's not overhead lines or subcontractors. It's the pressure that this team has been under in the last 6 months is immense, and there's actually commentary in the report around that. And I won't kind of pull out the teams that it alludes to, but I read that commentary and went, as a governor, as an officer of health, safety and wellbeing, you've told me we've got a fruit bowl, but are our people well? As at today, Chief Executive John, do you feel, so I've probably got two questions here, are our people well, and is there anything in the report we need to be concerned about?
I'll take the last bit first, if I may. There's nothing in there that troubles me and keeps me awake at night. We do see ways to improve, and this is a snapshot of that period in time. We've taken a lot on board. We've discussed it as a team and as a leadership team within Steve's function on how we move the needle again. Our people are under pressure because of local government and changes that are coming. We are looking at how we support our people with the likes of Lance Burdett and Dr. Paulwood, but also changes, people take change on in different ways. So, we try to encourage, be comfortable being uncomfortable. Sometimes it's not just about the change, it's about the process to get to the change makes us feel uncomfortable. So if we can actually engage with that, understand we have plenty of ways for people to feedback and get support. So our people are doing really well. I think, for the number of things we have had change over the last 6 months, I think really, really well.
As Chief Executive, I'd like to acknowledge the fantastic work that John and his team have done in the health and safety space since you've been here. Look, I think one of our biggest challenges for our team is managing the fatigue of change, and particularly if we think about the past 5 years, councils across the country have been in reform change. And, we heard last week when Mayor Lydia and I were up at the Rural and Provincial, we're going to get 4 further reforms dropped on us in December to respond to the early part of next year. And if you think about it, one of the challenges myself and my exec and heads of departments are constantly thinking about is how do we make sure our team get a break? How would we make sure they get some decent time off? Because traditionally it has been the summer period to get people away for at least 3 weeks. But we know that now we're coming into year number 6 of more reforms being dropped directly before Christmas. So it is ongoing, and one of the measures we look at is around what the annual leave balances are, and having leave programs in place. But without a doubt, it's a challenge that's not unique to Selwyn. I would say many councils across the country are thinking about that.
Thank you. So if someone move the health, safety and wellbeing report, please. Thank you, Sophie. Seconder. Thank you, Bruce. All those in favour? Right. Just realising we're coming up to the 2-hour mark. Is now a good time to have a 10-minute break? Yeah, 10-minute break. Apologies, Deloitte. Tracy's not
We're
quite
good.
back.
I think you can keep going.
Maybe we'll just get going, eh?
So thanks. So this is our internal audit report update. The team are just going to give us a quick run through of where we're at and what we're proposing for the coming year. So over to you, Dom and Sonia.
Thanks, Steve. Look, we won't provide too much detail here, taking the report as read and acknowledging that 2 weeks ago we provided a full update on our internal audit program to Council as part of induction. I suppose the things we will note is that we are on track for our 25-26 program. We have our external internal auditors here with us today, and they will provide an update on the payroll audit later in the afternoon. The key piece that we wanted to raise and flag from this report is the proposal to resequence our final 2 audits for the year. So that is bringing forward our procurement internal audit to earlier in the year. We have a new head of procurement and think that the timing is helpful to support them building their work program by bringing that one forward. We're happy to take any questions.
Sorry, Dom, so can you just let us know which pages are we having questions on? The risk registers or what papers are
So we're at the internal audit update.
Yeah, but we're not...
307.
Oh, 307, okay. Jumped too far ahead. Right. Nothing from me. I think as I alluded to last year, and I haven't. I mean, did you say their report went to full council a couple of weeks ago? That was just an update. Did you say on progress?
We provided a briefing to our incoming councillors and new council on the program and how things operate.
Yeah. Okay. Lydia, you.
My question was just on the page 315 of Diligent on the sensitive expenditure internal audit findings and recommendations. And it was the management response for 3.2, which is also referenced in 3.4. And so it just says, bear with because the screen doesn't turn. Management will develop an action plan to review the sensitive expenditure policy and related policies. This plan will be shared with ALT and the A&R Subcommittee for November 2025 meeting. And I was just wondering what is happening there, or have I missed something in this, that plan?
Lydia, I can answer that one. So for the next audit and risk meeting, noting that we've got this audit that was just being completed, we will be bringing back a sensitive expenditure report, and that will include the councillors and chief exec expenditure, and just a summary of how that will evolve over time.
Okay, cool. So that that report will come back to the February meeting. So okay, so when it just says November 2025, it's just deferred to February. Thank you.
Sam, did you have a question? Oh, sorry.
And the due date for that's 30 June 26. Is that right? So that's just the plan of it? Is that right, Alison?
It says 30th June.
Yeah.
But the plan was...
So Bruce, just to respond to that one. So the reports that we'll bring back, they will evolve over a period of time, noting that we've got a due date on this. So it's just to bring people on that journey of what we will be reporting.
Sam? Yeah.
Hey, funding of operational expenditure, page 311, is in breach of SDC policy. Any further clarification on that? And how?
Which line are you referring to, Sam?
Top line.
4.1.
Yep, 4.1.
sorry, like Lydia, I'm struggling to turn my computer around to see it sideways, but Sam, just to comment on that. So Deloitte, one of the first audits that, good idea, one of the first audits that Deloitte had done was a review of the revenue and financing policy, which linked it back to the previous long-term plan, where we had recognised that we were in breach of that policy. So that's backwards thinking. So that has been noted, and that's addressed in how we move forward.
Okay. But how was it in breach of SDC policy, just from my understanding?
In summary, it was the borrowing. So in our policy, we talked to our borrowing. There were some items where we had borrowed and some of those monies had gone to operating expenditure. It was a timing issue, but that was what the breach related to.
Okay, that's what I had a feeling it was. And the other point was pretty much what, based on, now it's not listening at all. Please hold. What Lydia was referring to, sensitive expenditure date. Can that not be pulled forward? The 30th of June 2026? I mean, sensitive expenditure should be pretty easy to draw a line through and say you can or you can't. Surely.
So like I sort of said to Bruce earlier, we'll bring the next report to the next audit and risk meeting. That will largely be what the report will look like. But the reason we put the June date is just to allow for any changes that the group might want to add into that. So it's just giving ourselves some leeway on timing. But largely the report that we'll bring back to the next meeting is what we'd expect to see and what other councils report on sensitive expenditure as well.
Cool. Because there was mention about it in the May audit this year. There was concerns over sensitive expenditure from memory. And have we made any progress on ensuring those sorts of things don't continue?
That is what this tracking spreadsheet is looking at. So it's all of our previous internal audits that Deloitte have carried out for us. And so we monitor these recommendations and actions. So I meet regularly with the owners of these actions and provide updates here to the Audit and Risk Committee.
Awesome.
So yeah, that is the progress to date.
Cool. Thank you, Sonia.
Thank you.
I'll be honest, Sonia, I just got too grumpy. I didn't even read it because I'm not a fan of spreadsheets or tables being dumped into board papers. So can we please make sure that, I mean, we're all turning our laptops on their sides trying to read it. But where this is, I mean, the good news is where this has come from is this is meant to be a repository of all findings from all independent internal audit and also Audit New Zealand. So this report here, where Audit New Zealand raise findings post their audit, it all comes into a central repository. So Sonia's done a great work in collating that. So this is a really good document for management, but I just think for the purpose of the Audit and Risk Committee, we need some kind of dashboard that is showing the tracking. We shouldn't need to have korero around the finding because obviously this is a new committee and these are all legacy issues, so you need the korero and understanding now, but going forward, we would have read this issue in an independent report. So this should be a fairly quick item because it's basically telling us, are we on track to delivering in the time frame that we specified? And also when the report comes to you, so you know when Deloitte's reports come to you, you know there'll be a management comment. So Deloitte have written a finding, management have responded to it, and at that time management will say, yes, we're going to action it, and we'll action it by 30 June or 31 March. And that's where we can say, actually, why is it going to take you so long? But once the report's been accepted by us, then that is the time frame that we're kind of holding management accountable for. So this should be a quick, if we could read it, this should be a quick item. So maybe just if we can try and get it into a some kind of dashboard, so it's not just a, but it is purely a how are we tracking on progress on closing out the item. And it looks like, I mean, most of them are, well, they're all green, aren't they? So that's why I probably didn't spend too much time on it. So, or one completed all green. So I think it's telling us a good news story. Is there anything? So other than that, we can probably move forward to the, any other comments or questions in relation to open items? So sorry, is the So can we, Audit and Risk Committee receive the internal audit update report and approves the sequencing of the internal audit plan for financial year 25-26. A mover and a seconder, please. Thank you, Sophie. Seconder, Bruce. All those in favour? Right.
Risk.
Risk.
So this risk management update is just that. It's the update on the work that's been going on under our work plan. We've given you copies and full oversight of the strategic and key operational risk registers. One of the things that we will be doing again before Christmas is we will be running a risk workshop with the council to readdress and go over with the new elected officials the risk appetite and the risk tolerance equations and how these now line up with I guess the views of the new elected officials around the table. So that workshop will occur. That will in a way inform the way in which we approach what is strategic and what is operational, and it will also seek to align where the senior leadership of council has assessed risk versus where the new council assesses the risk. So just I guess we're happy to take any questions unless Dom or Sonia you want to add any more comments to this update.
I think, Steve, the only thing I'll flag is much to Annalise's point, we have provided the entire suite of registers in this circumstance. We have our workshop in December with councillors, and then that provides us an opportunity to present on more of an exception basis and at a level that is much more digestible at this governance level. So in this circumstance, we've given you the full suite with a view to come back with something digestible come February.
Perfect. And I mean, you could always have this, but just some kind of and if people want to get into the detail, they can, but some kind of overbearing dashboard. When I look at it, this, and I come from a risk background, right? So I kind of get all the columns and but at a high level, what that dashboard might say is that in the inherent state of these risks, so without controls, we are red. After all our controls, we are still red. And yet our risk appetite said that we're moderate. So that kind of jumps out. So what's the commentary around that? So that dashboard would be going, look, the detail talks about 12 risks, but actually we need to talk to you about these 3 because we've said our risk appetite is here, but in the residual state, that's the alarm bell really, isn't it? It's kind of going, well, what are we doing about it?
Yeah. And so for the new members around the table, that was a discussion at the last Audit and Risk Committee that presented these documents. I think one of the members suggested actually that we put what's our target risk and where are we actually at with all the controls in place, and if we've got a variation, that's actually where we're going to spend our effort and our time. I think with the workshop with the new council before Christmas, we will just make sure that appetite or the tolerance is set, and so that we can then do a recalculation of where do we actually really want to drill in and what do we need to let you know that actually we can't get to that desired setting unless we do these other things that we haven't either got budget or resource for.
My final comment on that is I don't want to discourage you from this reporting, so please, Dom and Sonia, keep reporting red risk. Don't go away and say, right, no red risk to the Audit and Risk Committee, which I have seen in some government and local government. You've got to tell it to us how it is, but we just need to follow that up with what do you need from us? Like if this risk is sitting here and the risk appetite is only here, what do you need from us as governors? Yeah. Sophie.
Yeah, thank you for this and thank you for the printout. I'll probably be carrying it around for the next few weeks. It's just a bit easier than reading on the screen. I did have a question about one risk, SR13, which was mentioned in the report around mana whenua, just because the number 1 mitigation isn't happening at the moment. So at what point do we change the register if that doesn't eventuate again? I know there's a lot of work involved in whether or not that's going to happen, but it's kind of a, well, it's not there right now, so where do we actually sit?
Yeah, no, and thank you for that. We can definitely update that risk to reflect that it's not there right now, and put some actions around what we're looking at. So yes, we will definitely update the risk register to reflect that. Thank you.
I think it just probably to follow on from what Steve has said just around the reporting and this and what previous councillors had said, and I just wondered whether it would be interest to compare what is the risk appetite from ELT or staff and the risk appetite from councillors as well, and find the middle ground, because I think we probably have some differing views, but finding out how do we meet the middle ground in that space around risk.
Yeah, so that will be part of the workshop. We've got the ELT risk appetite score, and we will line that up against your new score to see why are we different, if we're different at all, and then what do we need to bring them together to get one position.
Cool. Great.
No other questions or comments. Can I please have someone move the risk management update report? Thank you, Tracy, and a seconder. Thank you, Lydia. All those in favour? Neil, Treasury report.
Hello again. So this Treasury report is as at the 30th of September. As at that date, Council had $315 million of borrowings with the LGFA. Council, as mentioned earlier, also held a cash balance of $61.6 million. And as we've explained, that was due to requiring more cash for debt that is rolling off. As mentioned, between December and April, we've got about 90 million maturing. And then also the uncertainty around the transfer or novation of debt to Selwyn Water Limited. In terms of our financial ratios, the liquidity ratio was comfortably met. The ratio set by our LTP, or the Treasury management policy in the LTP, was set at 110%. The cash held also helps with complying with that ratio, which was 120%. The higher debt is higher than the amount in the LTP, but due to the high cash balance, the net debt is still lower than the LTP. And as mentioned, we mitigate the risk of the increase in insurance rates and borrowing costs by hedging or financial derivatives with swaps. And as a result, the post-hedging cost of debt is almost 1% lower than the pre-hedging cost of debt. Some detail and background information that's been shared with this committee over the last 12 months is the fact that we are in breach of our payback ratio. So just to clarify that the payback ratio is a ratio set within our Treasury management policy. It is not a financial covenant ratio set by the LGFA. We will look to update the Treasury management policy once we have more clarity around what our LTP will look like with a capital program excluding water and sewage assets, as well as what it would look like in terms of the timing and the transfer of debt to SWL. So once we have that information, we can then recalculate what our financial ratios would look like, and then we can bring it back to this committee with a recommendation and your input for approval. At the previous Audit and Risk Committee meeting, the question was also asked whether we can source a revolving credit facility to ease the burden on cash reserves for our liquidity ratio. We've investigated that with our bank, Westpac, and they confirmed that unfortunately, because our debt is with the LGFA, we cannot get a revolving credit facility with the bank. It's two different legal parties. We have, though, investigated a standby facility with the LGFA, and we've got that option on the table, and we'll bring it back to this committee for consideration. Open to take any questions.
Questions, comments of the Treasury report? Oh, Sam, I think you're first on the list, Sam.
Oh, I must want to hear what Bruce is going to say first. Thank you. So interest rate risk is well managed with 76% of interest rate exposure fixed or hedged. Why were we 1.4 million over budget in finance costs?
So the finance costs will be only the cost on borrowings. And as mentioned, the borrowings have been higher than budgeted due to high cash reserves held. So you need to consider the interest revenue as well, and therefore the net cost of borrowings is lower than budgeted.
Cool. Thank you.
Bruce?
I think I'll just wait until I see the policy return and then the proposal around the LGFA standby facility. I need to understand how that works. So, and if you look at it, if you said, well, borrowing from the LGFA gives us a rate at a certain level, but we're comfortable with a certain level of cash carrying, you might be able to split your borrowings and have a look at whether or not we can actually stick some out with a bank that might give us a mockle. Because I still think holding $60 million worth of cash against a borrowing amount over a long period of time, because we seem to be cash pregnant all the time, is a really inefficient way of dealing with it. But that will probably mean you'll need a little bit of flexibility in your treasury policy to manage that. But I would encourage you to look at it and say, okay, how can we best do this? Because I think about it and think, we're missing out on, I don't know what you're getting on a term borrowing rate, but it won't be anything like the level of cost we're carrying. So you should be able to do that. I do appreciate that your hedge at the moment probably doesn't allow you to get all of the benefit, because we don't want to actually have effectively an ineffective hedge. But over time you should be able to get far better treasury management around it. I look at it and go, if we've got continual significance around capital contributions and also a growing balance sheet around your depreciation, you're going to be making cash as well, aren't you? So, and I'm pretty sure you're clever guys. You can manage it better than we currently are.
We're doing our best, but like I said, we'll definitely work with this committee to ensure that our policy is robust once we have the visibility on the long-term plan.
Yeah, I think we're pretty comfortable if we've got a better effective cash management policy than it currently is, because I look and say, well, at least say you're carrying $40 million worth of debt. That's even at 5%. That's a good chunk of money that we could be not giving back to the ratepayers, but at least alleviating a little bit of it.
I read that commentary as well and thought, well, that kind of makes sense, right, to relook at the policy once we've stripped the assets out. It also got me thinking about the incoming pieces of legislation. So, will any of those 3-4 pieces, have any impact on the way we handle cash, or is it too early to tell?
What it may do is impact our revenue. And that's why we need to see the detail and the timing and length of time it may take to implement some of the reform.
Any other questions, comments on the Treasury report? Otherwise, if someone move it, please.
Happy to move.
Thank you, Bruce. Seconder. Thanks. So all those in favour? Right. Legal compliance report, item number 11. We're doing well.
Good afternoon again. So I'm now here presenting the quarterly standard legal and compliance report. I will take it as read and note that a little bit of our thunder has potentially been stolen with how much legislative change there's going on and how much we've already discussed that today. We've had quite a lot of movement even since submitting this report in that space, and will continue to over the next particularly 6 weeks. Our team is working with teams across council on those as they come. We did, Steve provided a deep dive to our councillors on the legal function amongst the rest of strategy, engagement and capability the other day. We talked to how we've been tracking in terms of the work that we do. We're sort of continuing much as we started, looking at $425,000 worth of value to date for our financial year. Happy to. I think we had no, you're all right. We had discussed how we sort of manage and measure that. So as a team, we've established a tracker. We've put a blended rate that we apply across on the basis of what we were providing and paying external counsel. And then our team record how much time approximately they've spent on matters. So that's how we've got to that number. And then from our perspective, we think accounting for in-house efficiency, you could add a 1.4 multiplier, because I can provide advice as I walk through the corridor, or I don't have to provide a long briefing to an external counsel because we have the context as a team to provide that advice to our staff and our councillors. So I think that's probably all I'll touch on there. We've had some good progress in the Lagoima space as well. So since reporting to ARC, we have now started proactively publishing our Lagoima responses. Those have been grouped by category on our website under our Lagoima page. At last check, we had uploaded our 2025 responses, and we are now working towards our 2024 responses. Again, our Ombudsman complaints, we continue to receive them. Typically they're historic, and Steve again might have flagged to council more generally that good results on that front, that so far no adverse findings from the Ombudsman. So we've been acting reasonably in how we manage our Lagoima requests. And then, look, finally, I'll just touch on our policy review program. Again, we've circulated that to full council to give them an understanding of what policies we have. We're continuing to work on that, and with policy owners. There has been a slight increase, and that's because we did a further sweep of our policies to make sure we'd captured everything the first time, and we identified a few more. But we continue to track towards getting that review completed in time. So happy to take any questions.
Questions and comments on the legal report? There we go. Late command. Sophie.
Thank you. Yeah, just a couple of small ones, really. You mentioned about privacy training. Is that worth being rolled out to councillors as well?
We can, I think.
Oh.
That's something we can absolutely do if you'd like us to. Yep.
Yeah, we do sometimes get information that can be a bit more sensitive than you might be used to dealing with otherwise. And I did have another question, and this is being really slow now. Fascinating to see how many policies we have.
That's a lot of policies.
Even after having had many conversations about policies and delegations over the years, that is a lot. Is there a bit of a rationalisation option there as well?
Absolutely, and that's part of the program that we've been undertaking. There were more policies. So one of the, I'm not sure if it was the August or the May update now to ARC, the reduction in overdue policies partly was because we revoked a number, and there are, I think, a plan to go to ELT with a number of policies again in December. Yeah.
Okay.
And what we find too is that some policies are actually guidelines, and when you tie it up in a policy, you then it becomes into the delegation mix, and then you've got to go through a really bureaucratic formal process where actually it's intended just to guide actions. So that's one of the other things we're doing, is making sure a policy is actually needed for the work we're doing.
Cool. Thank you.
I might follow up on your question, Sophie. Very good point around training of the Privacy Act. In my kind of daytime job role, I have completed, probably much like Deloitte, internal audits of compliance to the Privacy Act, and that the scope of that has included training to the board, because it's very much needed. And probably in this organisation, probably even more so. And I think, those changes, I think, was it 2021 that came in? I think it's really important that all governors understand their obligations under that Act. So, yeah, I'd highly recommend that training gets rolled out to the new governors of the council.
I'm sorry, it's not particularly a question, but I think what it is just I'm looking at the legal side of the things and the work that your team are dealing with in-house, and I think that's a really good news story, and the fact that we're making savings in that space and having our own legal people to refer to. And I can tell from here, and maybe that could be my question, is that you're not using 6-minute increments to charge your time in the hallway there, Dom.
No, and I had to smile that Councillor McLeod has recovered from her 6-minute unit nightmares. I don't know that I quite have yet, but look, we do record our time. You can get 10 6-minute units into an hour, which is the joy, but we don't quite go down to that level when we report or record.
And so another question I can kind of frame into that is the matters that are still open, are they been referred externally, or are they just time needed to address those in-house?
Yeah, so look, a lot of it is time. It might be that we provide some feedback, and then in terms of prioritisation, it might not then be the urgent priority. We have also a number of really ongoing long projects. If we look at something like Sheffield Pool, and it's an important project and it sits there. We're not about to close that one out because it's not finished yet, but that was something that was opened, I think, about day one that Sophie arrived in the team. So, yeah.
Yeah, it's been open for a while, but yeah, it's good to hear. Thank you.
Sam?
More of a statement than a question. Although it would be very difficult if we were to measure the time saved by publicly declaring the goimas that have been asked in the past, so then people can actually just go and find the information out on the website. I think that would be huge in the future. So well done. Well done.
Yeah, great comment, Sam. I was kind of allude to, yes, you can do that kind of cost assessment on, I think when I started 4 or 5 years ago, I don't think there was a legal team. I think it was 0800, legal. What we've done in building the capability and the capacity within Selwyn is great, but I don't think we can actually compare even the cost with, it's not apples and apples, because the social cohesion risk in New Zealand, especially across government and local government at the moment, and the number of legoimas that are coming through just in the last 18 months. I know it's not a part of your team that I'm sure that they don't really enjoy that part. I'm sure they'd be preferring to be reviewing really exciting contracts and construction contracts rather than responding to legoimas. But I think that option, or going back to a outsourced model, will just, no council will ever be able to do it again unless that social cohesion kind of risk of miraculously goes away. So well done on building that capacity. And so I think cost is only a small element of it, because I think the world has completely changed in the last kind of 2 years. So. Can have someone move the legal report and second? Thank you, Tracy. Seconder. Thank you, Lydia. All those in favour? Alrighty. That have a mover and a seconder to move into public excluded, please? Bruce, thank you. And a seconder? Ty, Sam, all those in favour? No, closing karakia. Ohea, te po, kia watea, e kua watea. Ka pai.